Wall Street's main indexes closed higher on Wednesday, with the Dow adding almost 0.9%, the S&P 500 gaining 0.3%, and the Nasdaq ticking up marginally. The ADP National Employment Report showed U.S. private payrolls unexpectedly declined in November, helping to keep expectations elevated for an interest rate cut by the Federal Reserve next week. But Dean Smith, chief strategist and portfolio manager at Folio Beyond, believes a rate cut would be a step backwards in the battle against rising prices.
The stock market is definitely taking a bit of a relief rally here. There was some real concern a few weeks ago about the tech bubble bursting suddenly. We had a sell off, but I think that most of that concern has been pushed aside. At least the can's been kicked down the road a little bit. The recovery in most of the big tech stocks, Amazon, Google, Cisco, Oracle, those stocks have pretty much recovered from that sell off. Where the concern is still lingering for the tech companies, though, is in the credit markets. We've seen credit spreads widen pretty significantly in a number of these companies, the big bellwether there being Oracle, which is considerably wider, more than 100 basis points wider in their credit default swaps. So keeping an eye on the linkages between debt and equity in the tech sector is going to be a theme I think we are going to have to contend with for quite some time. The number that ADP produced this morning was, in fact, a pretty soft number. I mean, we have seen a string of softer numbers in recent months. The overall unemployment rate, though, is continuing to hang around that 4.3%. So we've got sort of a good news, bad news on the one hand, on the other hand, picture coming out of the labor market.
Stocks on the move Wednesday included Microsoft, which shed 2.5% after a CNBC report said the tech giant has cut AI software sales quotas after many salespeople at the company missed their targets. Microsoft denied the report. Shares of Marvell Technology jumped almost 8% after the chipmaker said it will buy semiconductor startup Celestial AI in a deal worth $3.25 billion. And shares of American Eagle Outfitters surged 15% after the retailer raised its annual comparable sales forecast, betting on strong demand during the holiday season.